Good morning, everybody. Another day, another hero. Today's hero, it's Paul, and right now is speaking Jens from the Berlin office of Admiral Markets. Welcome to our daily trading ideas webinar. Real-time daily trading ideas. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, market screening, and maybe 1 or 2 questions from your side directly answered in our quick and smart webinar. Our goal is 15 to 20 minutes, so let's have a start. It's Tuesday, 7th of November 2017. Of course, every webinar from Admiral Markets starting with a risk disclaimer. Forex and CFDs are leveraged products and can result in losses that exceed your deposits. When you start with Forex and CFD trading, please start with a demo account and make yourself familiar with all about trading, risk management, leverage, and more about that. If you'd like to read the full disclaimer, just visit one of our web pages, for example, admiralmarketsglobal.com or admiralmarkets.com, and you will find the full risk disclaimer on our web pages. This is me. My English made in Germany, but hopefully some of my quality too. That's my info to all of our webinars. But I'm not the main speaker. The main speaker today is Paul. This is our scheme. On Monday, it's Jay's day. On Tuesday, it's Paul's day. On Wednesday, it's Mike's day. On Thursday, it's Nenad's day. And on Friday, it's Dirk's day. Every trader is different and unique. Every trader has a different trading style. Let's see if you like Paul's style. If yes, thank you for that. If not, check out the other traders and you will see many, many different styles and kinds of trading. Today's actions are tomorrow results. That is our goal here. That's what we are doing and performing here. And of course, if you like to trade Forex and CFDs, you will get many, many benefits only at Admiral Markets UK. For example, one of our bestseller, DAX30, the DAX CFD, typically fixed spread of 0.8 points only without any commission additional. You can trade that with full lots or mini lots. Everything is possible. No barriers, no minimum stop distances or anything else. Trade it with MT4 or MT5, like you can see with all details on admiralmarkets.com. Please check it out. There you will find also something about our regulatory background. Admiral Markets UK Ltd is regulated by the British Financial Conduct Authority, FCA. And if you'd like to speak with one of our sales representatives, call us or send us an email. And most of all our webinars will be recorded. A couple of hours later, you will find them in our youtube.com/admiralmarkets channel. Check also that out, please. And now it's time to come over to Paul. Hi, good morning, Paul. Now it's your turn.
Again, good morning, everybody. I hope you can all hear me very well. Hello from a rather wet and gloomy part of the UK this morning. I hope you're well. I hope you can all hear my voice. I hope you can all see my screens.
The first 2 seconds where you was quite silent, but now everything is great. Go ahead.
Excellent. Excellent. Thank you, Jens. Thank you, Jens. Hello, everybody. And yep, so it's my chance to go through what I'm looking at and what we've been viewing. So what I'm going to look at today is I'm going to do a little quick recap on some of the trades we talked about last week and how they played out. But also I want to talk about the DAX today. Okay, I want to give you a little bit of a trade idea around about the DAX. So let's start with a quick recap. Okay, so the euro dollar. All right, I've talked about for the last few weeks about the sort of the head and shoulders and about price sort of dropping down there, and you can see that it's still working its way down there. Okay, and we've got beneath that 116 level, which is acting as pretty good support. The thing I just wanted to raise for, let's say, for maybe the newer traders in the room is understanding about how a sort of a trend might accelerate, and just using the very simple moving averages that I have here. So if you're completely new to trading, you'll just see my charts just have green bullish candles, red bearish candles, a blue 20 period moving average, a red 50, and a green 200 period moving average. Very simple, nothing exotic, and lines of support and resistance drawn on. And what we've talked about over the last few weeks is how on the 4-hour chart, the 200 period moving average was acting as lovely dynamic resistance. You can see there, hopefully, that every time price came up, price was capped by that. But the interesting point I just wanted to sort of educate the completely new traders on is how, as this price and this trend has picked up, what's happened is, instead of the 200, we now have the 50 period acting as a cap. Okay, you can see price bounced down, it rallied back up, but actually now that 50 is acting as dynamic resistance. just dynamic in the word, and that it's consistently changing, and that has been helping capping price as it moves down. So that gives an indication to a trader that a very, very simple way about how that sort of trend is accelerating in terms of speed and momentum. That can be both a pro and a con based upon your own particular trading style, but it's just a very simple way to look at how you manage your trends. Now, I wanted to go down and take a little opportunity, but as we've been speaking, my little flag pattern has set up and fired off. You can see there, Draghi's been speaking to me this morning. He's not waited for anybody. I wanted to get a little trade on that flag pattern there. Hopefully, you could have seen that. I want to be short euro at the moment. It's just you can see for yourself. There's been a lovely opportunity there. The trend has just accelerated away, and so there's no reason to sort of not be short euro on that. Quickly looking at euro sterling as well. Okay, so what we've had is interestingly that last week we talked about how price was coming down to around about this 87.50 area, and I sort of talked about how we'd see a bounce perhaps off this the sort of the daily 200 period moving average and the sort of 87.50 sort of level of support, and that's what we got last week. Okay, last Wednesday. I admit that I didn't expect it to bounce as strong as that, but invariably a lot of that was driven by Thursday's interest rate announcement in the UK. But the kind of interesting thing for me is that sterling has got sold off across the board towards the end of last week based upon that news. Why did it sell off when there was an interest rate rise? Well, for those who are completely new to trading, what it was is the price or the understanding of that interest rate was already baked into the price. Okay, it was already baked into the price. What people were waiting for, what traders were waiting for, is to see what was the indication of future interest rate rises. And Mark Carney was pretty, pretty sort of quiet on that. Okay, his view was that there wouldn't be that many more. Okay, now of course things change, but the market took that as fewer interest rate rises coming in 2018, and that is what caused that sort of sell-off across sterling towards the end of last week. But interestingly, even with that sell-off, we have still, it's reversed and against the euro. Okay, and invariably what we're seeing here is, since then it has been euro weakness and sterling strength, which goes across to that pattern we've just looked at on the euro dollar, of euro weakness and dollar strength there. And euro has been strong for the last 6 months, but you look at the momentum of it, you look at the price action of it, that is moving away. That's been ebbing away. That sort of that euro strength is now turning into weakness. And as you understand and know that, you'll be able to look at that for trade opportunities to sort of work with that. So with that in mind, then that's just an update on euro dollar, euro sterling, two of my favorites. But I want today to have a little chat about the DAX. So here's the DAX. This is the weekly chart. Okay, we have the weekly chart. It's been in a fantastic uptrend. You can see, since the sum of the year, the DAX has been in a hell of a trend as it's accelerated away. Okay, it's been absolutely fantastic in terms of being able to get on board and trade that. And what I want to see is that, well, is that trend sort of looking to decelerate? Now, you can see as I move down to the daily chart, what I want you to do is to take a little understanding of this gap here. Okay, this gap. Where did that happen? Well, this actually happened last Wednesday when I was doing my own little piece, and we had after it was a bank holiday in Germany on the Tuesday, if I recall rightly, and when the market reopened on Wednesday, market gapped up, and it flew up that day. And for the next couple of days, you can see it's edged its way higher, but I wonder now, is that sort of move just running out of steam a little bit? Is it running out of steam? Does that provide me with an opportunity? So, what I look at is I'm going now down to the 4-hour chart, and this is where I start to get interested. Okay, so here we go. So here's the 4-hour price action, and what we have here is, this was the end of last week, the start of this week. We had the gap last week, and then invariably price has just worked its way up. And what I'm interested now, ladies and gentlemen, is I'm looking at this as, is this a false breakout that we've had this morning? Is this a false breakout? Okay, we tried to break up to the what were the highs. Okay, we failed that and we've fallen away, and that is what I'm looking at as my trade idea of the day. What I'm looking to do is to effectively to take a sell position, all right, with my stop above the highs, and then what I'm actually looking to do is I'm going to target down towards the sort of the 50, which is also down towards the end of this gap. For those of you who are completely new, gaps happen in markets, and it's just you know, I talk about it in terms of natural states, okay? And then what I mean is nature abhors a vacuum, okay? Nature abhors a vacuum. So whenever there is a vacuum in nature, nature will look to fill it. And it's the same in financial markets. When there are gaps within a particular market, at some point that gap will fill. And so this provides me with an opportunity as a trade idea in terms of a place to look at for a target for my particular trade. So just for a place to trade on here, this is just another great little indicator you can probably see here on the Supreme Edition. What this is the Admiral calendar, which you can find, of course, in the navigator, and you can drag on. And what it does is it actually lays over the chart when you're getting actually news coming out, and it also sort of rates it in terms of its importance. So you know, you put your cursor over, as you can see there. You can see Draghi's speech when he's talking there. Okay. So invariably what we have is, you know, that's a great little tool, especially for intraday traders, okay? Especially for intraday traders, making sure that, you know, you're not sort of trading just in front of a big news announcement. You know, you just want to be savvy and aware of that. And so that's just a great little tool that you can just drag, put on there, and you'll be able to see it. And if you're, as I say, if you're, let's say, an aggressive intraday trader, that provides some great opportunities. So here's what I'm going to do on our, we'll look at this. We'll have a, I'm just going to sell that beneath the low of it. This is this fantastic tool here, okay? So we've got the mini terminal there. There we go. We can see I have my stop just beneath the low of that 4-hour candle, which is just completed as it's a bearish candle there. I just want to put my stop, there we go, just above the top of it, okay? Just above the high of that. Hopefully you can see that. And then where am I going to put my target? Well, just drag. And here we go. Just going to put it in front of that 50 period moving average, which, as I say, is also about the sort of 50% of the gap fill. I'm hoping that that gap there acts almost like a magnet. As I said, it's like a vacuum, and nature looks to fill its vacuum. And there we go. The trade is on. Okay, you can see fantastic from this tool. If you see me struggling with the old sort of MT4 trade sort of trade tool a few weeks back, this is to show you how fantastic this mini terminal tool is, that you can just drag on, use the order ladder on the side. The order's there, it's on, it's placed, you can see it. Makes life much easier, much easier, that Supreme Edition. So there you go. There's a trade idea for today, looking at being a little bit contrary, a little bit looking for a bit of a mean reversion trade. I'm not looking to call the exact top in the DAX. I don't think we've seen that. What I'm just looking at is, has that after the gap, we had a strong push up. DAX is now just running out of steam a little bit. Had a little bit of a false breakout there this morning. And so if the trade rolls over and falls away, I'll be looking to sell that with the hope of moving down towards where the gap is within the DAX. So there you go. Hope that gives you a little bit of interest. I'll just, if you've got any questions about that, then shoot them over between myself and Jens. We'll happily chat about them. I can just see that. What is the abacus at the bottom? Asks Andrew. Well, there you go. I think hopefully I've answered that just before there, just to give you a little bit of the news. And Paul asks, what's my view on oil? Okay. Well, let's see if we can talk about oil. Excuse me. And pull that up. Have a very quick chat. Now, what I would say is that I'm not a trader of oil myself. That's not my particular well, how would I describe it? That's not my particular forte. But excuse me, I do keep an eye on oil. I do keep a sort of a little look on it, and the reason being is that, of course, it plays out across different boards. Okay, it plays out in in effect on the dollar, plays out effect on yen, and particularly the Canadian dollar. And so so for me, I've been trading a little bit of Canadian dollar this week, and a lot of that has been helped by the fact that we saw this, this sort of break on, this is WTI, this break on oil. Why has that happened? What's been happening there? Well, a lot of that will have been linked to the events in Saudi Arabia over the weekend. Some people are calling that as the new man in charge, sort of tightening his hold on powers. Others saying that it was effectively, in some ways, a kind of a bit of a coup. Others saying that there's sort of Iranians playing games there. There's whatever meaning you want to attach to it, you can do. You can find a news article to back whatever your view is. Ultimately, though, we're traders. Okay, we're traders, and when I look at that, okay, oil has broken out to new highs, which we have not seen for 2 years now. We've not seen price, we've not seen oil at that price for about 2 years now. So, I'd be looking at being bullish on oil. I'd be looking at that 200 period moving average weekly there, okay, where we're running that about. That's about $58, $59. I'll be looking at that as a sort of an intermediate target down to down to the daily chart. Well, normally, if I am going to trade a breakout, what I like to see is I like to see a breakout, then I like to see come back and a retest of the breakout area, and that provides me with a kind of a low risk, small trade risk area to sort of take my trade from. But as you can see here yourselves, ladies and gentlemen, this, after the events of the weekend, oil has just broken north and it's just hurtled north, hasn't it? It's just it's not holding up for anybody. Maybe we're seeing a little bit of profit taking from that there. So what I'd be saying is that I'd like to see price drift down a little bit, maybe to around about that $56 area, but then I still think that we'll actually we've broken to new highs, and so I would be expecting us to drift up towards the sort of $59 region. So I hope that gives you a little bit of insight into oil, Paul. As I said, I'm not an oil trader, but this is technicals on a chart, and I can just look at whatever we see, and you have to trade what you see, regardless of the regardless of the fundamental and geopolitical news that may be hitting the wires at the moment.
All right, our goal is 15 to 20 minutes, and today we have 1 or 2 minutes more. One question more from one of the audience guys and girls. Why you take profit on the end of the gap, not at the beginning of the gap? Can you answer that, please?
Why do I have it at the sort of the beginning of the gap?
Why you take profit on the end of gap, not at the beginning of the gap, is the question.
Sure. So what I'm looking at is I'm just looking at the fact that we also have here on the 4 hour that we've got the 50 period moving average on the 4 hour that's coming up. So what I'm interested in is looking at a move down to around about there, which will be into the gap as well. Okay, so you're absolutely right. You could actually have the closing price there as the gap. What's that looking at? About 13,230. Okay, you could have looked at that as the particular level, but you'll have to excuse my my English phrase, but in trading there's the old saying of don't be a dick for a tick. I'm not trying to squeeze the last bit of blood out of a stone. What I'm happy to do is to take my trade and move it towards a natural area where it'd be a good target that is still going to provide me with probably a sort of a reward to risk of probably around about 2.5 to 1. That's a great trade for me on a swing basis. I also have to be aware that that the overall trend is still to the upside. Okay, the overall dominant trend is still to the upside. This is a sort of a mean reversion swing trade, and so I'm not expecting this to be the top in the DAX. I'm not expecting this to run and run and run. This is more like how would I describe it? It's like a boxer's jab. I'm not looking for the knockout blow. I'm looking to get in, take a quick jab, and then move away from it. That's all the rationale behind my plan. I hope that answers the question, Jens.
I think so. Thanks for now. Thanks for today. And if you'd like to join our new webinar, next webinar, tomorrow to the same time, and tomorrow it's Mike's day because it's Wednesday. And if you'd like to see and watch this video or this webinar again, a couple of hours later in our YouTube channel, like I introduced to the beginning. Thanks for today. Thank you, Paul, and have a nice day. And like any day, good trades. Bye from Berlin.